Okay. Hey there, everybody. Thanks so much for joining us this Thursday afternoon for our live webinar. I'm Leah College, an investment counselor here at RealWealth. And today you've got the whole gang here. We've got Ben Eric Smith, Aristotle Compass, and Joe Torre. You get all four of us. Woohoo! We are getting together this week to tackle some of today's biggest investing questions and issues. All right. Well, without further ado, I think, Joe, you're going to kick us off with what might be the most popular question of the day, and that is, are housing prices going to continue to go up, and are we in a housing bubble?
Thank you, Leah. As Leah mentioned, one of the questions that we've been hearing a lot lately is, are housing prices going to continue climbing? Because we've seen quite a run up in the last year or so. And how long can this continue? And are we in some kind of bubble? So if you advance to the next slide, we can start addressing some of those questions. So here's the state of the real estate market that we're seeing. There are rising housing prices in many markets. And some builders are even raising prices after the property is under contract, and that's highly irregular. So you go into contract with a property for 250, and then 3 months later, when it's half built, they say the price just went up to 270. So that's highly unusual, but that's the nature of the market we're in right now. What inventory is available is often sold quickly, usually within days, and there's a backlog of construction that can't keep up with demand. So when you see all these things happening, the market kind of feels overheated, and it brings memories to some people of 2008. So the question comes up, are we in a bubble? So just to make sure we're all on the same page, the definition of a bubble is when asset prices are rising to levels unsupported by economic fundamentals. So in order for us to answer the question, are we in a bubble, we have to kind of look at the fundamentals, things like supply and demand, that sort of thing. So next slide, please. All right, looking at the supply side, first, U.S. housing stock is at an all-time low, not all-time, but the National Association of Realtors calls an underbuilding gap, that the nation's housing stock is low by anywhere to 5.5 to 6.8 million units since 2001. There are a variety of reasons for that. They just haven't built enough houses, and there's a shortage. Then on top of that, we had COVID for the last 18 months. And that caused construction to stop in many markets. Laborers weren't sure it was safe to go to work, so things got put on hold. And even now that COVID is kind of tapering off, we're still seeing that it's hard to get building materials like lumber and concrete and cinder blocks, and it's hard to get skilled labor. So all these things add up to a shortage on the supply side. And if we go to the next slide, we can take a look at demand. Demand is very, very strong. Millennials, which are the largest demographic cohort, 76 million people, are entering the housing market. For a long time, they were sitting on the sidelines, but now they're starting to do household formations and buying houses and setting up families. So that's a huge influx of people entering the housing market. In addition to that, we have pent-up demand. Over the last 18 months, a lot of people who normally would have been buying during that period have been sitting on the sidelines and wanting to see how this COVID thing played out. And so now that things are slowing down, I mean, that COVID is tapering off, these people are entering the market. So there's a lot of pent-up demand that's entering the market at the same time. In addition to that, there's a lot of institutional buying. So here's just two examples. There are more. Zillow bought 3,800 homes just in Q2 of last year, of this year, and they raised 450 million so they can buy some more. Another company called Open Door bought 8,500 homes last quarter in 40 different markets across the US. So this is putting more pressure on the demand side. More people buying houses. The institutions are buying by the thousands, and that's lowering supply that's available to regular investors and to owner occupants, as well as increasing demand. Then finally, on the demand side, interest rates are really low. So when interest rates are low, housing is more affordable. So the question is, will that continue? And the answer is yes. The government, with all the money printing that's been going on, our national debt is something like 28 trillion. So if interest rates are allowed to go up by 1 percentage point, that adds up 285 billion of interest expense to the budget deficit each year. And if interest rates go up significantly, it's entirely possible that the government won't even be able to pay interest on the national debt, let alone the principal. So on the demand side, things are all looking very strong for a continued demand. Next slide. Oh yeah, and then the government policies are adding fuel to the fire. You've probably heard in the news that the government's planning to spend $1 trillion on infrastructure. That's roads, bridges, airports, highways, all that stuff. That means that demand for building supplies is going to go up. So cost not so much lumber, but maybe concrete, rebar, steel frames, cinder blocks, all that stuff is going to be in greater demand. Right now, our builders are having a hard time getting those supplies, but this time next year, they're going to be competing with the federal government for those building materials. And the government has very, very deep pockets. So we see that continuing, that the shortage of building supplies is likely to continue. In addition to that, the government's planning on spending trillions more on other programs, depending on how that plays out and whether the legislation gets passed. The Fed is going to have to continue buying bonds and printing money basically out of thin air. And when that happens, that leads to price inflation. Now, inflation is good for real estate investors because that means rents go up and property values go up, and you get to pay off your fixed mortgage with inflated dollars. During the 1970s, investors did really well with real estate because of the inflationary period. So that's good, but overall for the country as a whole, it's not great. And we see housing prices continuing for that reason as well. All right, next slide. So all these factors, the supply side, the demand side, and government policies are all adding up to basically a perfect storm for increasing in housing prices. And we see that continuing. One caveat is that remember that all real estate is local. And while we see this trend nationally, there are individual markets that might not appreciate. I mean, if you're in Toledo and job growth is flat and population growth is negative, you might see negative prices. So you have to look at supply and demand conditions in each individual market. There's something like 400 metropolitan statistical areas in the United States, and all real estate is local. But nationally, what we're seeing, especially in the markets that we're in, we pick growth markets, we're seeing prices continuing. So our conclusion is that we are not in a bubble. Remember, a bubble is when asset prices are rising to levels that are not supported by economic fundamentals. And the economic fundamentals of supply and demand and government policy are all pointing to continuing appreciation. Now, I know that over the last 18 months, a lot of investors have been sitting on the sidelines waiting to see how this COVID thing played out. And unfortunately, they missed out on some appreciation during that time. But the good news is that it's not too late. You didn't miss the boat. We see all indicators leading to more price appreciation. So if you were to buy now, you could still enjoy more appreciation going forward. And after all, real estate is a long-term asset. 20 years from now, when your property is worth $450,000, you're not going to remember if you paid $260 or $270 for it back in 2021. It's a long-term asset, and you just have to look at it that way. It's like the old adage, don't wait to buy real estate and then wait. And if you do that, you think you should be okay. All right, that's it for me, Leah. Back to you.
Yeah, well, I think those are all really good points, Joe. And I love that, pointing to the fundamentals of supply demand. I feel like that makes it clear. I mean, everybody uses the terminology bubble, I think, in just to be synonymous with like prices going up, right? But
Right.
I guess, regardless of the definition of that term, the better question we should be asking is there a catalyst for prices coming down? The answer to that is most assuredly no. There's nothing that suggests that prices are about to come down. And you didn't mention this, but I know you know it because we've talked about it personally, you and I, just about the incredibly solid financing that exists in the housing market today too, and the likelihood that people are sitting in incredible equity positions. I did some research on the number of people that refinanced, and on average, how much households are saving now because of the refinance that they were able to do. I mean, an affordability crisis, arguably not good for anybody, but there's a lot to suggest that people are affording these homes and that they're sitting in pretty good debt positions on them too.
Yep.
Did anybody else have any thoughts or comments you wanted to add on that?
I'll comment. Well, just a side note, I would say maybe it's a good time to be a builder or get into construction, right? Because of all the demand that's going to happen for materials. So, but yeah, definitely a great time to invest. But I love the all real estate is local thing that Joe put in there, because It's so true. I bring this up all the time when I'm talking to members, is that, you live in San Francisco and you're like, oh my gosh, $1.4 million for a 1,200 square foot home. That's crazy. I don't want to invest in real estate. Well, but if you look in Charlotte, or you look in Tampa or Birmingham, prices, the homes that our teams are selling in those markets are well below the median price in America. I think the median price in America sold home is like 330 or 340, and we're selling below that still. So it's still a fantastic deal. So you just have to look outside your market and really understand that, like Joe said, there are over 400 metropolitan cities in the U.S. and they all operate independently. So I love that saying.
Yeah, Russell sent in a good question that I think is really apropos for the discussion now. It is, if prices are expected to continue to rise, can you still buy properties that offer cash flow? And I don't want to go too soon or jump the gun, Aristotle, on some of your points, but I mean, how are you responding to investors who are concerned about the availability of cash flow?
Well, certainly there's cash flow. I don't think there's any property that our property teams are offering that are negative cash flow. So they're all going to cash flow. It just depends on what you're looking for. Some people are okay with a 5 or 6% on a new construction home. Others want 15 or 20%, right? So I mean, Ben, what do you say about that?
Well, I would say that there's all kinds of markets out there where they do not cash flow, and those are not part of the markets that we are in. That's why we're not in San Francisco or Los Angeles or Denver or Seattle or a whole myriad of other markets. So there's plenty. Prices will continue to rise, and the places that don't cash flow now will continue to not cash flow, and they'll continue to get worse. And the places that have cash flow, maybe they won't be as good as they were last year, just like they aren't as good as they were in 2012, but they still will cash flow to a certain degree. And so to answer Russell's question, prices are expected to continue to rise. Yes, you can still buy properties that cash flow, but you just have to pick the right market. And that's what we're here for, because we've got currently 20 that do cash flow.
Yeah.
And rents are rising too.
I think it's important to point out too that rents are also going up as well. Especially in these growth markets where we've seen the most rapid appreciation. We've also seen the most rapid rent increases as well. So are they increasing in lockstep? No, there might be a slight diminishing margin, but it's definitely increasing as well.
Yeah, rents always, I mean, not always, but most of the time lag behind, right? So in an appreciating market, people are like, oh my God, my margins are getting squeezed. I used to have 300 cash flow, 200, 150. Well, the rents will most likely catch up. They'll just take a little while to catch up, and that margin will then increase again. So it's just one of those things, and I'll touch on this later. I find people freak out and find reasons to stay on the sidelines, and sometimes you can't just keep doing that.
Right.
Yeah.